Hello and welcome to the first edition of the EdgeProperty.com Market Talk. With me today are three very experienced and well-known personalities from the Malaysian real estate fraternity. From my far right is Vincent Ng, CEO and founder of Kim Realty, Mr. Gerard Koh, Senior Vice President of Redfield Properties, and Si Kok Long, Director of Metro Homes. The topic of today's discussion is Malaysia's super prime commercial and residential address, otherwise known as the Kuala Lumpur City Centre or KLCC in short. Those familiar with KLCC will recall that property values have been escalating from the year 2005 until a breather appeared in 2008 or so due to an oversupply situation. Well, of course, the global recession further pressured both values and rentals. Interestingly, of late, renewed optimism seems to have reappeared. In fact, there are whisperings that investors are looking at KLCC again. Kok Long, is the return of interest in KLCC for real, or is it just a mirage?
The KLCC market, we have seen a lot more inquiries, and prior to June 2009, much less inquiry. The market has been very quiet, but since the June 2009, we have seen a lot of inquiry, a lot of offer being made, but prices are still not matched back to the vendor price that they want. I think the price will be there because of looking at the many factors. One of it is low interest rate. The other area will be the land cost. The price will be there, and the demand is also there.
Okay, do you see values having bottomed out?
The value have been bottomed up because there is no way that a new developer come up with a different concept selling at much lower price than what we already have in the market, and the price have come down quite a fair bit.
Gerard, do you agree that values actually have bottomed out?
Yes, I think we take the general sentiment from the agents who are working in our group that as C was speaking earlier, prior to June it was quite quiet, and now we're starting to get a lot of offers coming through, so it's just a matter of tying the transactions up.
Yeah. Vincent, what about on your end? What are the signals that you've been receiving?
Well, I would say although June was 2009 was really the sentiment change, but as way back as even March starting, there are really indications that people are seeing things bottoming up and beginning to be interested back again in KLCC property. They see opportunities. Of course, there is still a mismatch between expectation and what people are willing to pay, but definitely it is not as gloomy as when we were experiencing it in the last quarter of 2008.
Gerard, what do you think actually triggered the change in sentiments?
I think 2008 was a year, I would say, a year of correction, where it was a point of time where the sellers and the buyers were trying to find that perfect equilibrium, and it came to a point of time earlier part of this year where there was a price match in terms of the demand versus the supply. In terms of the trigger point, I think it was more the fact that everybody got used to the fact that the recession is there. Everybody still needs to move on, and of course with the banking sector it was quite helpful in the sense that it was quite conducive to still purchasing properties in the market in KLCC.
So by how much actually have values dipped from its peak?
I would say if compared with 2008, it probably would have dipped between say 15 and 20%. So something that was probably pricing of say between 800 to 1,000 to 1,500 per square foot price would probably be around 800 to about 1,000 per square foot price now.
Does that mean that people, investors who have actually bought into KLCC earlier, they have they are not in the positive category now, territory, or are they still in the money?
They are not in the positive category. because from my figure, it showed that average they have been come down from the peak price to current price is about 30%. Some project went to 40%. There's quite impossible in short term to recover back to that level.
But these would be the people who have actually bought from the secondary market and paid a premium, wouldn't they? As opposed to buying from the developer.
The developer also selling in stages.
Okay.
It all depends on when you lock in your price.
Sure.
In the early stage, yes, you will be getting the lower price. But because this luxury product, they are going for stages. When they reach certain level of percentage of sales, they will increase the price. So some of the buyer who come in much later will be locking in at the peak price.
Yeah, it's interesting because I recall there was a report in early March this year that prices at KLCC actually had dipped by about 15 to 20%, and there was a forecast saying that the dip could continue to actually reach as much as 30%. But obviously that did not materialize, did it?
Well, I would say 15 to 20% was a very generalized thing.
Okay.
But there are pockets of developments within KLCC, without mentioning the name of the project, might have even dropped as far as 30 to 35% or even slightly more, depending on the reputation, the exact location, and the pricing at the beginning of the launch.
Right. So when you say a dip of 30 to 35%, you're talking about, from what kind of base? From the primary market or from the secondary market? From the developer's price?
From at various stages, because developers keep going up and people keep selling as it progresses. You see, we're talking about the peaks. This where when we use percentage in that sense, where when I say 30 to even up to 40%, it was at the peak of the which would be towards the. I think there was a lot of rush, into individual speculation, and a lot of foreigners was looking at it. Compared to the region, Kuala Lumpur has always been perceived as the place to buy because it's so cheap, you see. Because Singapore was then way too high already for them.
Right. But strangely, since that's the thought and belief, but yet we weren't selling like hotcakes. What happened?
Compared to Singapore or the other part of the region?
Yes, we're cheap, we welcome foreigners, but yet we're not selling like hotcakes.
Well, we have our inherent problems of these regions. First of all, we don't have that big a market, and our return is not perceived as good as Singapore or Hong Kong or Shanghai in terms of rental returns. So people don't see that the capital appreciation will be that much, although comparatively we are very cheap. But because of that returns factors, that the foreign investors are not chasing the property as much as they would have done in other part of the regions.
Right. So in other words, although we may be cheap relatively to the other regions, but it doesn't necessarily mean that we are the most attractive.
Sure, that has always been there.
Yeah. Is there anything that we can do to actually correct that?
I think that would involve a lot of government's policies, the political climates and other factors that influence the market. Sometimes, as you know, price is not the only factors, but the other factors of how foreigner perceive Kuala Lumpur, whether it's a safe place to invest, whether it's how's the crime rate, the convenience of the place, and of course, if you talk about living, I think no foreigner will say that Malaysia is a bad place to live. I mean, those who have lived in Singapore and all that have always praised Malaysia as a country which is full of greenery. But we have other problems as well on the negative side.